Have you ever wondered what that three-digit number on your credit report really means? It might seem like just another score, but trust me, your credit score is way more important than your high school GPA. This magical number can open doors to awesome opportunities or slam them shut in your face. So what exactly is a credit score, and why does it matter so much? Let me break it down for you in a way that's easy to understand. What is credit score? Your credit score is like a report card that shows lenders how responsible you are with money. It's a number, usually between 300 and 850, that sums up your entire credit history. The higher the score, the better you look to lenders. Lenders use your credit score to decide if they should give you a loan or a credit card. They want to know if you're likely to pay them back on time or if you're a risky borrower who might miss payments. The 5 factors that determine your score. So how is this all-important number calculated? It's not magic or guesswork. Your credit score is based on 5 key factors. Payment history, 35%. This is the biggest deal. If you've been paying your bills on time, your score will thank you. But late payments can really mess things up. Payment history is the most significant factor in your credit score calculation. It shows lenders how reliable you are at paying back what you owe. Every time you make a payment on a credit card, loan, or other bill, it gets recorded in your credit history. Credit utilization, 30%. This tracks how much of your available credit you're using. Experts recommend keeping this percentage below 30% to maintain a good score. Length of credit history, 15%. The longer you've been responsibly using credit, the better. Your score likes to see a long, trustworthy track record. New credit, 10%. Each time you apply for a new credit card or loan, it can cause a small dip in your score. Too many applications in a short time can really hurt. Credit mix, 10%. Having a mix of different types of credit accounts, credit cards, auto loans, mortgages, etc., can give your score a little boost. By understanding how much weight each of these components carries in the scoring calculation, you can focus your efforts on the most meaningful areas to steadily build excellent credit over time. Why your credit score matters so much. I know what you're thinking, it's just a number, right? Wrong. Your credit score is like a golden ticket that can unlock all kinds of awesome financial opportunities. Here are a few huge reasons why it's so incredibly important. 1. Better interest rates. A high credit score can qualify you for much lower interest rates on loans and credit cards. This can save you thousands, even tens of thousands of dollars over the life of a loan. Think about a $250,000 mortgage going from a 6% rate to a 4% rate could save you over $100,000 in interest charges. For credit cards, the difference between a 20% APR and a 12% APR on carrying a $5,000 balance is over $400 per year in interest costs. 2. Renting made easy. Finding a great place to live can be stressful, and many landlords and property managers now check credit scores as part of their tenant screening process. A good credit score signals you're a low-risk, responsible tenant likely to make rent payments on time. With a high score, you're way more likely to get approved for your dream apartment or house without having to pay massive security deposits that can run into thousands of dollars. 3. Employment opportunities. Believe it or not, your credit score can impact your ability to get hired for certain jobs, especially roles dealing with money, finances, or sensitive data. Employers often use credit scores as one measure of a candidate's trustworthiness and financial responsibility. A low score could cost you your dream job opportunity. 4. Lower insurance rates. Auto insurance companies in most states consider credit scores when calculating premium rates for customers. Their data shows people with lower credit scores tend to file more claims on average, so keeping your score up can lead to cheaper car insurance bills year after year. The same applies to homeowners and renters insurance too. The bottom line is that a great credit score opens a world of financial possibilities. A poor score can hold you back and cost you way more in the long run. 5. Easy ways to build an amazing credit score. Building an outstanding credit score is like a marathon, not a sprint. It takes time, discipline, and smart habits, but it's totally doable if you follow some simple tips. Number 1. Pay bills on time, every time. Payment history is the biggest factor in your score, so making all payments on time is crucial. Setting up autopay or payment reminders can help ensure you never miss a due date and incur late fees that could ding your score. Number 2. Keep balances low. How much of your available credit you're using, known as your credit utilization ratio, is the second most important factor. Aim to keep this ratio below 30% by paying down balances aggressively each month. Letting balances creep too high can hurt your score. Number 3. Leave old accounts open. The length of your credit history matters, so think twice before closing old credit card accounts you've had for many years. Doing so can shorten your overall credit age and potentially hurt your score, even if the accounts have a $0 balance. Number 4. Check for errors. Credit report mistakes like accounts that aren't yours, wrong balances, or payment statuses can seriously drag down your score. Pulling your free annual reports from the 3 bureaus and disputing any errors is a smart practice. Number 5. Be patient. There's no get-rich-quick scheme when it comes to credit scores. Boosting your score takes months and years of responsible credit management over time. If you stick to good habits, you'll steadily see your score climb higher and higher, but there are no overnight shortcuts. With some smart decisions and patience, you can build an outstanding credit score that will help you save money and achieve your bigger financial goals in life. Impressing friends or potential partners with an incredible credit score definitely doesn't hurt either. A healthy credit score equal to a healthy financial life. At the end of the day, your credit score is like a window into your overall financial health. A high score doesn't just mean you're good at managing debt. It's a sign of responsible money habits across the board. When you maintain an excellent credit score, you're telling the world that you're a financially disciplined person who can handle money wisely. You're increasing your chances of achieving big goals like buying a house, starting a business, or living your retirement dreams. So don't underestimate the power of that 3-digit number. Taking steps to understand and improve your credit score can quite literally change the trajectory of your financial future. Like, share, and subscribe for more easy-to-understand money tips that can level up your financial game. Let's get that credit score looking fabulous together.